Hello and welcome to Your Stocks. I'm Sonal Bhutra and with me is Manglam Malu. Manglam, well, Nifty is off the day's low. However, still there are certain stocks which are moving around. We are seeing pressure coming in from Reliance and some of these pharma stocks. They are seeing about a profit taking after the tremendous move that we saw in these stocks.
Absolutely, it is coming off the lows of the day, but just moments ago we had the Nifty intraday chart up for you on the screen. Just wait a while, look at that chart. It looks like the ECG of a patient because it's so volatile all through trade, and that's precisely the way the markets have been all through today. Not just today, in fact, yesterday as well in the last hour, we got a big dip and then a big recovery. That's only telling you one thing, that it is range bound, and within that range, it is extremely choppy. As we move into the last hour of trade, the expiry hour for this week, let's see where it goes right now. But here on Your Stocks, what we do is cut through all the volatility and tell you what you should be doing with all your trades and investments. Before that, first up, all the top stories. The market is volatile in afternoon trade. Key indices dragged by heavyweights like Reliance, HDFC Twins, ICICI Bank. All of them are key drags, while pharma as well as auto stocks also under pressure. However, the mid-caps, they fare better. They trade in the green.
Dr. Reddy's recouped some morning losses after the company confirms that they have detected a cyber attack, but their plants are not shut. Says all services will be up within 24 hours. Aurobindo Pharma declines today after receiving a US FDA warning letter for its New Jersey unit.
Another round of interest rate cuts by home financiers and a marquee office rental deal by DLF provide the necessary impetus for a further up move in real estate stocks.
And Bajaj Auto reports a largely inline set of earnings. Reversal of export incentives impacts margins, but management commentary is positive. Now all eyes on Asian Paints, which is expected to report a good quarter with domestic volume growth seen between 7 to 8%.
All right, so let's get on with answering all your stocks and investment related queries. And to help you with that, we have Ruchit Jain analyzing all the technicals, as well as Parthiv Shah talking about the fundamentals of your investments. So we have the first query coming in from Chennai. T.S. Narayana Swamy calls us, or rather he's written to us, and he has investments in Rane Brakes as well as Cyient. He's written to us before as well with regards to Rane Brakes as well as Cyient. We do not have his purchase price, his investment horizon all the time since he's been holding it. But, Parthiv, your view on these stocks? Just a general view if you could give.
Sure. Good afternoon, Mangala. See, in terms of Rane brake linings, the last quarter results were stellar. And I think goes to show all the cost-cutting measures that the management had taken during COVID times are now playing off. And also it is definitely a proxy in terms of the automotive sector recovery. And that has also slightly helped. And more importantly, I think they are into very mission critical, safety critical friction equipments, whether we talk of brake lining, brake disc, and I think they are very important equipments where they have decent market share. And they also have very good market share in the replacement market. The confidence booster is about the management announcing a buyback, and the buyback comes at a hefty premium to the current market price, which is around 650, and the buyback is announced at around 825. So I think what I would suggest is, unfortunately, the investor has bought in little at higher levels at around 903. So my suggestion would be add up, cost average your position, and do tender some of your position in buyback. Thereby your cost will come down. Otherwise, it's a fantastic company, totally debt-free balance sheet. Auto ancillary is a sector where we do expect some sort of recovery. Now, if I were to talk about Cyient, no doubt, I think in the IT engineering services sector, it's a good name. But what we have liked more is Larsen & Toubro Technologies, because I think that's the company which has a better order pipeline. They've made huge strides in Internet of Things and a lot of other innovative digital segment in the engineering field. So my sense is that it is better off to play this sector through L&T Technologies, where the scope is better, the clientele list is better, and the deal pipeline is even stronger. So I would play with L&T Technologies.
Okay, so Cyient actually has underperformed Nifty IT in last couple of months as well, but the numbers they reported in Q2 were quite strong. It was a beat on all parameters. But let's not put a break to this and let's go across to the next query. Venkat writes to us from Vijayawada with a query. He has investments in Punjab National Bank and he wants to know whether he can hold it for mid to long term or not. Ruchit, let me come across to you. The stock is hovering around that 52-week low mark. What do you suggest should Venkat do with the shares right now?
Yeah, hi, very good afternoon. Well, firstly, if we look at the entire PSU banking basket, the PSU banking space itself has shown a good amount of underperformance compared to private sector in last few months. And even at current levels, it doesn't seem that we would see any kind of momentum coming in these stocks on the higher side. So I think it's better to exit from the stock. And within the PSU banking basket, also PNB itself has been a decent underperforming stock. So I think private sector banks offer much better risk reward ratio or opportunities where in case the banking space continues its move in next few months. And I think stocks from the private sector space such as RBL Bank or some large cap banks such as ICICI Bank would tend to outperform. So my call would be to exit from Punjab National Bank at current levels.
All right, sell the stock at current levels, and I've never seen a fundamental analyst speak about any PSU in high regard, barring SBI. So let me preempt your answer, Parthiv. A three-word answer would be switch to private?
Absolutely, switch to private, and if you want a good bet, I would say Kotak Mahindra Bank, which is slightly underperformed as compared to its larger peer like HDFC Bank. We feel that there'll be still more wealth destruction in stocks like Punjab PNB Bank, and they're merged. It's a mess, Mangalam. And look at the return ratios; they are like pathetic. Whether you talk of ROA, ROE, credit cost. I really doubt this bank can really deliver good shareholder returns, at least in the next 1 or 2 years. So totally avoid, switch to a private sector bank named like Kotak Mahindra Bank at this time.
Okay, so switch to private sector banks is the view coming in from Parthiv. But let's go across to our next viewer. Swaroop writes to us from Faridabad. He holds 500 shares of Edelweiss Financials at 172 rupees, and he wants to know the future of the stock. So Parthiv, let me come across to you. It's basically a 67% slide from his investment price. What do you suggest the investor does at these levels?
See, unfortunately, what has happened is, despite the fact that the management has made a lot of efforts to generate a lot of liquidity, we have seen a lot of investments coming in from even foreign funds in this company, and the company's liquidity position was quite good. But somehow or the other, we have seen of late a lot of negative news tends to plague Edelweiss. Very recently, I think SEBI just ordered them to put 450 crores in escrow account towards the liabilities of Anugra Stockbroking, which is again a fraud sort of a case, and that is what really puts a huge overhang on the sentimental value of Edelweiss. And people are really skeptical in terms of its NBFC book as well, despite the fact that management has lot number of times clarified that there are a lot of liquidity. But I think the skepticism will not bode well for Edelweiss for quite some time. So despite all the valuation call and everything, I think I would suggest an avoid on Edelweiss. There are a lot of other better plays. I think I'm better off suggesting a stock like HDFC Limited, which you had even suggested on our show last time when it was hovering at lower levels of 1700. Even at levels of 2000, we feel over the next 3 to 5 years, this is a stock as an NBFC which will really beat a stock like Edelweiss from here.
Fair point. It's a big move that we've seen on HDFC. Don't go by this year's chart. In fact, in this week itself, it's up almost 5%. And this month, we've seen a 17% move on HDFC. So yes, lower this year by about 15%, but that's the financial space. In the last 7 days, the stock up by 5%. And in this month itself, up 17%. Doing well for the financials, actually. What we'll do is take a short break, come back, answer all your stock queries when we return.
CNBC-TV18 presents Mutual Fund Funders.
In life, it's good to have a choice because not everyone has the same likes and dislikes. Like, take this friend of mine, for instance, who likes adventure sports like maybe parajumping, water skiing, parkour. But me, I like to explore new places, maybe read a book or, just take in the view generally. So in the same way, not all investors have the same outlook in terms of, risk and returns. So therefore, those investors who are relatively conservative could perhaps look at investing in debt funds. Now, what are debt funds? debt funds invest in fixed interest generating securities like, say, corporate bonds, government securities, maybe treasury bills, commercial paper, and other money market classes. However, one should remember that returns from debt funds are also not guaranteed. Few of the major advantages of investing in debt funds could be low-cost structure, relatively high liquidity, tax efficiency, and also a reasonable amount of safety. So it's ideal for investors who want to invest for the short to medium term of, say, 1 to 5 years with exposure to relatively, lower risk components of the market. So debt funds also, remember, tend to offer investors higher returns than the money that you could earn from the interest on, say, your savings bank account, for instance. But I also want to add a word of caution that debt funds can also be risky. I mean, not as risky as equity funds, but there is a degree of risk that a debt fund has, and that will depend perhaps on the composition of its portfolio. Also, investors will do well to remember that there are different types of debt funds that they can invest in based on their need for either predictability of returns, liquidity of the investments, or perhaps the returns that those investments
spiked. India Bulls housing from the broader markets now has seen a bit of a rally in just the last few minutes, up around 1%. Alongside that, a big move is what we're seeing on Shriram Transport Finance, up 5% today. So, it's been all the way up since morning itself. So at any point, one would have gone long on that stock, they would be making money. And alongside that, Shriram Transport, of course, is a CV play. Ashok Leyland doing well as well. This morning, they announced the launch of a new truck, that stock at the high point of trade. And yesterday, we had the management of RK Forgings telling us that, demand for CVs is fairly strong as well. So we'll keep an eye out on all these stocks. But we have another query coming in. Vineet, I believe we have him on the phone with us. Yes, Vineet, you're calling us from Hyderabad.
Yeah, I'm from Hyderabad.
Tell us, Vineet.
Yeah, actually, I'm holding some shares in Bharti Airtel at 426.
Okay.
So I'm thinking to hold these for a long time, and can I invest more in this?
When did you buy it? 426? Because earlier on the way down, the stock hit 426 sometime, I think last week, and then fell very close to that 400 mark, just below that. And in this week itself, we've seen the stock do rather well. So you've almost recovered a fair part of your losses.
Yeah, I'm at no profit, no loss.
Yeah, when did you buy it?
October starting, October 1st or 2nd, I didn't remember.
Okay, so in the last 2 weeks itself. And you want to hold it for the long term, and it's not just a trade.
Yeah.
All right, Parthiv, your view on Bharti Airtel?
We are bullish on Bharti Airtel at these levels. See, very frankly speaking, Mangalam, we did see a massive correction in this counter, and probably the markets, I thought, got really pessimistic on the fact that the way Reliance Jio had launched its postpaid plans, which were definitely very aggressive. But the good thing about Bharti is that, they have held on to their high-paying subscriber base extremely well. And every time I think we monitor the monthly subscriber addition, and I think the important point is to see how well-paying they are. And if you see the data, I think they have been adding more of the higher ARPU paying subscribers, which I think bodes extremely well as a trend. And our sense is that Bharti Airtel, which has maintained the best ARPU trajectory in the entire sector, will tend to improve it. Their balance sheet is rock solid. They've paid a lot of their liabilities. And our sense is that at these levels and going ahead, I think there's no other way but the industry ARPU to go up, because the data consumption is on a high and the third peer, which is Vodafone Idea, is struggling. So there could be more subscriber attrition happening from Vodafone Idea to likes of Reliance Jio and Bharti Airtel. That is where I believe it's going to be more like a duopolistic market, and Bharti Airtel should take a lot of advantage of that.
Let's do a quick dipstick survey itself. Ignesh, what phone service do you use?
I use Jio.
All right, fair point. Okay, thanks a lot for that. With that, we move on to another query.
Oh, yes, absolutely. So we have a viewer who's Vignesh Chandran. He calls us from Calicut with a query. Actually, he writes to us with a query from Calicut, and he has investments in HAL, and he says that he bought it at 826 rupees per share. So right now it's actually at 725 rupees per share, so it's actually under some losses. What would you say, Parthiv, at these levels? Should he average it, or he should continue his investments? Because stock, while it's up today, for the year itself it has been flat and quite off from the 52-week high levels.
See, I would not suggest averaging at these junctures. What my sense is that no doubt defense is a sector which is getting a lot of priority, unfortunately, due to a lot of skirmish happening at the Chinese border, at the Pakistan border. And that is where I think the government has shown a lot of intention to upgrade a lot of defense-related equipments. And Hindustan Aeronautical Limited is, I think, a very, very prestigious company in the defense sector. Despite being a PSU, it has a fantastic order book. And I think the execution of late has tended to improve. So I think the reason why I'm suggesting not to average is because, these PSUs tend to move very slowly and there's always an overhang of government coming back and selling their stock. But in case of any sort of higher defense budgetary allocation, these are the type of stocks which tends to move. So if at all the viewer sees levels of 1,000, 1,100, that is where I would suggest an exit.
All right, thanks a lot for that. In fact, on that note, we'll thank both Ruchit as well as Parthiv for taking the time out, helping all our viewers with their queries. That's all the time that we have on this edition of Your Stocks, but you stay tuned to CNBC-TV18. Keep emailing us your queries. And before we slip into a short break and hand it over to the team of Closing Bell, this festive season, CNBC-TV18 brings to you important market lessons from the masters of Dalal Street. Here's Prateek Gupta of Kotak Securities with an important tip, a festive tip for investors.
Firstly, would like to wish all the viewers of CNBC TV18 a very happy Navratri, Dashera and Diwali. I hope this upcoming festival season brings you a lot of cheer. Now, one of the important lessons of this pandemic and this market sell-off and recovery this year has been the importance of emotional investing, in my view. I think when you invest in the stock markets, it's very important to keep your calm and not get carried away by emotions. But I would say just be careful, keep a check on your emotions, don't get carried away. For retail investors, generally, we would always recommend invest through professional money managers like mutual funds, or otherwise, if you're doing investing directly, then do your research thoroughly and make sure you watch out for companies which have a good business, strong management, but the long-term earnings growth prospects are very solid. Those businesses tend to do very well in the long term, and any market downturns are actually buying opportunities.